Welcome to AIStocks Finance. Today we're looking at why not to buy Palantir. It's been making waves recently. Some call it the future of big data and AI. Others say it's overpriced. Their earnings are coming out February 3rd, 2025, so there's a lot of buzz. But before you jump in, let's break it down and see what's really going on. Now, you probably heard about their work with the government, but what's really interesting is their commercial business. It's growing like crazy. We're talking 54% year-over-year revenue growth. That's not just some random number. It's a sign that businesses are seeing real value in what Palantir offers. And get this, businesses are actually increasing their budgets to get Palantir's services. That kind of pull is rare and speaks volumes about the results they're delivering. But hold on, before you get too excited, let's talk about valuation. See, the enterprise market, the one Palantir is targeting, is massive, way bigger than the government side. This means there's huge potential for growth. But here's the catch. Palantir's stock price has been on a tear, soaring from around $20 per share to almost $80 in just a year.
While their performance is impressive, that kind of jump makes you wonder, is the market getting a bit ahead of itself? Is the price justified by their current performance and future potential? I'm not saying Palantir isn't a good company, but right now the price seems to be baking in a lot of future success. Almost as if the market expects them to hit a home run every single quarter. And that's where I get a little cautious. Let's look at their profitability. Palantir is finally consistently profitable, which is a big deal. This was a major point of criticism in the past, but they've turned it around. Last quarter, they had a 20% profit margin, which is pretty solid for any company, let alone one that's still in a major growth phase. Even more impressive is their cash flow from operations. They're at a 58% margin, which means for every dollar of revenue, they're keeping 58 cents in cash. To put that into perspective, that's better than some of the biggest software giants out there. But here's the thing, even with all this good news, there's a gap between Palantir's stock price and what many analysts consider a realistic valuation. That gap is making a lot of people, myself included, hesitant to jump in right now.
So should you buy Palantir before their earnings announcement? Well, that's the billion-dollar question, isn't it? In my opinion, it's probably wise to wait. Look, Palantir is doing incredible things with data and AI, pushing boundaries and delivering real results. But in investing, it's all about balancing potential with price. And right now, the price seems to be tilting the scales a bit too far. What happens if they miss their earnings estimates? Or if their growth slows down even a little? There's a real chance the stock price could take a hit. And no one wants to see their investments plummet because they got caught up in the hype. Know what you're thinking? AI is the future. Palantir is a leader in the field, so why not get in on the action now? It's tempting, right? I get it. That fear of missing out the FOMO, it's real. But remember, investing based on hype alone is risky. It's like what happened with Tesla a few years back. Groundbreaking company revolutionizing the electric car industry, stocks soaring. Everyone was talking about them, and it felt like you were missing out if you didn't buy in. But the valuation got so inflated that the stock price became disconnected from the company's actual performance. And when that bubble burst, a lot of people lost a lot of money. Now, I'm not saying Palantir will be the next Tesla, but there are some parallels. The hype around AI is real, and Palantir is positioned to benefit from it. But that doesn't mean their stock price will just keep going up forever. At some point, it needs to reflect the company's actual performance. And that might take some time. So instead of getting swept up in the excitement, let's take a step back and apply some disciplined investing principles. First, we need to do our due diligence. Don't just rely on headlines or what you hear from friends. Dig deeper. Look at their financial statements, understand their business model, analyze their competitive landscape. It's about making informed decisions based on solid information. And remember, even with a great company like Palantir, there are risks. They're heavily reliant on government contracts, which can be unpredictable. And their technology, while powerful, also raises ethical concerns about privacy and surveillance. These are things to consider before investing. One way to manage risk is through diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, industries, and geographic regions. Think of it as a safety net for your investments. Now, coming back to Palantir, here's what I would do. I'd add them to my watch list. I'd keep a close eye on their earnings report on February 3rd. See if they can live up to the sky-high expectations the market has set for them. Let the numbers guide your decision. And most importantly, be patient. Sometimes the best opportunities come to those who wait. A better buying opportunity for Palantir might present itself later on, maybe after the hype dies down a little or after they've proven they can consistently deliver on their promises. Remember, investing is a marathon, not a sprint. It's about making smart decisions over time and letting the power of compounding work its magic. Now, I know this might sound a bit boring. It's definitely not as exciting as chasing the hottest stock or trying to time the market perfectly. But trust me, in the long run, discipline is what separates the successful investors from the rest. It's like the tortoise and the hare, right? Slow and steady wins the race. Don't try to get rich quick. Instead, focus on building wealth, gradually making smart decisions over time, and letting the power of compounding work its magic. Think of it like planting a seed. You can't expect it to grow into a mighty oak overnight. It takes time, care, and nurturing for it to reach its full potential. Investing is the same way. You need to give your investments time to grow, to compound, and to generate the returns you're looking for. So if the Palantir, don't let the fear of missing out drive your decisions. Take a deep breath, do your research, be patient, and let the numbers guide you. There are plenty of opportunities out there in the market, and you don't need to rush into anything.
Palantir is a company worth watching, absolutely. They're doing some incredible things. But remember, investing is about finding the right balance between potential and price. And right now, that balance just seems a little off for Palantir. All right, that's it for our look at Palantir. Don't forget to check out our other videos here on AIStocks Finance. We've got tons of great content on investing, personal finance, and building wealth. While you're at it, please hit that like button if you found this video helpful, and subscribe to our channel to stay up to date on all our latest videos. And don't forget to leave a comment below with your thoughts on Palantir. Are you bullish or bearish on the stock? Let us know. Thanks for watching AIStocks Finance, and we'll see you in the next video.